Ladies and gentlemen, I'm delighted to be here with you for our Why Web3 session. With me is a great cast representing different corners of the new world. So Deng Chao in the middle is the managing director of Hashkey Group. This is a group that has been, since 2014, investing in about 500 companies in the blockchain space. Next to him is Alexander Heller, founder and CEO of Hyperspace. Alexander is bidding to transform the future of entertainment by building metaverses with physical gates. And Daniel Liebau, next to me, is the Chief Investment Officer of Modular Blockchain Fund. Daniel is always evaluating and picking potential winners for his blockchain fund. And I'd like, before we ask the why Web3 questions, I want to ask my guests, what is Web3 to them? And let me start with you, Alexander. What does Web3 represent to you? Is it a vision of a world in the making? What's this vision about?
Sure. Well, thank you so much for having me here today to be on the panel with you guys. A real treat. Why Web3 and what is Web3? For me, an internet owned by creators and builders, really orchestrated by tokens, I think is key. That's kind of a very solid definition, I think, but I think real world application really speaks to everything. Decentralization, kind of opportunity for creators, builders is fundamental. I really like to use one example in particular. Big audiences like social media. When we look at creators today, every single creator should be an advertising platform for whatever they're showcasing. If you go to a concert, say you go to a Paul McCartney concert, and 10,000 people stick up their phone when Paul McCartney comes up on stage, they're all advertising a product, but they're not getting paid for it. Yeah. In the Web3 ecosystem, everyone gets paid by a token. Everyone is able to monetize their imprint, their impact, whether that's as an advertising platform, as a gamer, et cetera, into the space. So I really think...
So Alexander, it's basically for you about the opportunity, the ownership, and the decentralization. I want to pass this on to Deng. Deng, you've been in the space on the global level for a long time. We're saying since 2014. Is there a consensus on what Web3 is?
Thanks, that's a great question. To be honest, I don't think there is like a universally recognized or accepted definition as of now. From our investment practice over the past 7 years, what I see, of course, like Alexander's example, there are different versions of Web 1, Web 2, Web 3. Web 1 is about one-way reading. Web 2 is about two-way read and write. Web 3 is about read, write, and own. That's a good explanation. But from an investor's perspective, we see three differentiating factors about Web3. One is about the technology itself. Blockchain has been called the next generation of internet, which might not be accurate, but it's a good analogy. The nature of the technology is distributed, and the consensus mechanism creates an environment where the cost of trust is very low. And it in a way reduces the need for a middleman to act as a medium of trust. So this is from the tech layer. From the application perspective, we're seeing new business models built on top of this new tech layer. And thirdly, it changes the relationship between we as an individual, as a user, and the platform that provides us services. It gives us more control over our own asset or our own data of our own privacy. And also, we take a share in the benefits.
Daniel, so do you agree that it is more than an extension of Web 2? It's more of an evolution, but deeper even?
I mean, I think the key thing to think about is that Web3 platforms are organized in a very different fashion than Web3 platforms. Web3 platforms are for-profit companies with shareholders that need to show returns to the owners. But the ownership situation in Web3 is very different. Many of the issuers of these tokens that power Web3 platforms are not for profit, right?
Yeah.
They're foundations.
Yeah.
If you hold the token, you become part of that community. So I would agree, basically there is technology, there's mechanism design, there's also community that play the key roles. And it's not what Web2 is, which is there's a company that is governed by the board and ultimately accountable to shareholders that sells a product to a customer.
Deng, I noticed that you chose to choose the word distribution while my two other guests used this decentralization. You don't like the word decentralization?
It's not like I don't like the word. It's that the word doesn't really reflect the reality. Because the blockchain technology, by nature, is distributed. Put it in another way, in the internet age, we run data centers, IDCs, in one place. The blockchain space is powered by miners or power that distributed in different areas, different geographies. There is no center, so there's no sense. It makes little sense to decentralize it if there is no center.
Okay, let me go back to Daniel because he's researched decentralization. You've got research on that specific topic. I want to hear what you think, and I want to hear what many people often ask about whether there's some conflict when we talk about moving towards a decentralized world and having centralized governments.
I mean, so first of all, decentralization is not binary. So it's not like it's either decentralized or it's not decentralized. I think of decentralization more as a spectrum. You can be either more decentralized, less decentralized. And then second, what I would say is it also depends on your lens. So you can talk about physical decentralization, right? Locations. You can talk about control or power. You can also talk about wealth. And one of the sort of interesting research insights of a upcoming paper is that we write with a professor from Cornell is that those Web3 platforms that manage to distribute the wealth on their platform more evenly, that basically has a positive effect on the token price. So it's something to think about.
We go back to evaluation of the operating systems. I want to go back to Alex. Alex, are things simpler? Your end, is the metaverse simply a very natural evolution of the gaming world?
For sure. I mean, I think that, there's a kind of, cataclysmic moment, when the biggest social media company changes their name to Meta and everyone kind of jumps and reacts.
Yeah.
But the reality is that metaverses have existed for ages. Video games have been in existence for 30, 40 years. In-world economies, in-world tokens, gaming skins. I mean, gaming skins as NFTs, Robux, a currency that 8-year-olds interact with every single day, tokens, point systems. I mean, money is ultimately a point system. So this existing in a gaming world, interacted with by hundreds of millions of people every single day, is a functioning metaverse today. And you'll see as these walled gardens start coming down and interoperability really takes over, which I think is really in the roadmap for most major companies in the space, you'll start seeing this idea of a kind of more generalized metaverse take place. But in-world economies are clear. They're there. Gaming skins equal NFTs. I mean, I think the most prohibitive element of the NFT space is the name itself. I think there's 2.7 million active users on OpenSea today. Reddit called NFCs digital objects and sold 3 million of them last week or 2 weeks ago. This space is growing very, very quickly through these kind of seismic events where it kind of doubles, things happen, more users engage, but it's very clear users have been in this space in a different format for a long time, and now we're just shifting more than anything. our company, Hyperspace, we actually built physical entertainment parks.
Well, I'll come back to you and you'll tell us what
pleasure.
hyperspace is.
Of
I
course.
don't want to interrupt the flow. Daniel, some believe that the financial applications of Web3 came as an expression of frustration after the financial crisis of 2008 and an expression of distrust. What's your take on this?
Well, I think if you think about when Bitcoin showed up in the world and why it showed up, then it's clearly because there was a lack of trust in the financial system as it operated back then. And well, a decade in, it's kind of interesting to see that it seems to look the other way around now, where lots of people have concerns about, how trustworthy the crypto ecosystem is. In my mind, this entire space is a nascent market. Nascent markets come with large opportunities, but they also come with all sorts of rogue actors. And I think as the market grows and the sort of professional participation increases, these things get washed out.
Deng, do you sense tension between traditional businesses like banks and new business and applications in the Web3 world? Do you sense tension? Is it useful?
What, me?
Yeah.
I do think, like Daniel mentioned earlier, with the more interest from institutions, from traditional companies, the role of blockchain or Web3 company is more complementary instead of like trying to compete with the incumbents. In terms of like payment or banking, we invested in Africa, Latin America, and a few other regions that people are really really need to use it in their daily life because of the lack of mature financial infrastructures, and they work with banks, work with financial institutions to serve the local users. So I would say the extension for institutions, the extension into Web3 space is not just necessary. It's like a natural evolution into that area.
You would like to see more dialogue in this space between traditional businesses and new businesses?
The dialogue is always going on.
Daniel, do you sense tension between traditional businesses, specifically the banking sector?
I think one key thing here is that traditional institutions, for example banks, need to reevaluate what kind of role they want to play in this ecosystem. It's evolving very fast, and it's all about disintermediation, and yet banks just want to be the intermediary. So I think that's a bit of a problem. They don't look at this and say, okay, how do I fit in? Rather they say, no, I just want to be the guy in the middle. And that might not be so great.
Sure. It's okay. Let me go back to you, Alex, and I want to ask you on which blockchain did you decide to build your metaverse?
So we're not building a metaverse. We're building basically a theme park where you come to the park and you basically create different types of content, whether that's more social media forward content or digital assets like digital fashion items, sneakers, avatars, and the like. And those digital assets are built on the Ethereum blockchain. But in terms of us actually building a metaverse, it's called a big video game. That's entertainment in the metaverse. And so for us, we're the physical component. We're really looking at location-based entertainment, the future of kind of experiential attractions, and bringing two of the most addictive and kind of condensed spaces in the world, social media, content creation, and gaming, into that physical front end. A big Web3 on-ramp as well. So when you come to our parks, like House of Hype, in Dubai Mall, which will open in February, 100,000 square foot park, you immediately get a wallet upon entry. you have an in-world economy powered by a point system called Hypercoin. You're creating all manners of digital assets, finding digital objects in AR that unlock physical experiences, et cetera, but it's very light. It's very, we're in the business of blockchain-enabled AR filters, effectively. This is all about mass adoption. It is all about fun, and it's about mass engagement. And that's really a key here. I think that a lot of people are very intimidated still by the space, and we are trying to pull people in a very kind of volume down, exciting front end, but then give that lean forward experience of, I come to your park, I create a digital sneaker on a holographic projection stage by talking to a hologram and telling it that I'm excited to be at the House of Hype, and all of a sudden I have a digital object that I can mint as an NFT and is interoperable, and I can bring it into any open world gaming platform. And so for us, that's the very lean forward. But we're playing into very populated spaces here. I mean, video game skins economy is a $100 billion a year business. Digital identity is quickly changing from your Instagram feed to your wallet over time. There are a lot of people that build their digital identities in games already. And so this is an extension of that idea.
Daniel, you say blockchains must be fair to be sustainable. Is there room for special advantages on blockchains or even abuse of power on some?
Well, I think applications like Alex's are sitting on top of blockchains, right? Yeah. On top of so-called smart contract platforms. And while token prices of the smart contract platforms today have very high correlations, they all move up and down together, I don't think that from a technical perspective they are all the same. In fact, they're quite different. They come with different characteristics, and some of these characteristics make some of them more adoptable than others. And of course, fairness is one big topic. If you think about the amount of traffic on the Ethereum blockchain, for example, that is related to maximum extractable value or front running, is about 20%. Yeah. So is that very fair? That the average user has to effectively pay a bolt-on tax? Probably not. Right? But there are other. I mean, in the fund, we look at about 25 different characteristics, and we monitor them on a regular basis to identify trends and how these things develop over time. The one thing I would say is that with some of these smart contract platforms, once they're created, that's kind of how they operate, right? So it's very hard to unravel or change these things once they're launched.
I'll come back to you with more on this, but I want to ask Alexander if he considers his hyperspace token as currency.
Not really. I mean, so it's a point system, like I said. And for us, there's redemption around that point system. So the way that we're building it is you'll be able to redeem your Hypercoin into partner cryptocurrencies. But what I really love about tokens is loyalty programs. And so we're trying to position our token as an asset within the park. So I can come and win Hypercoin for any manner of things. We're working right now, something I'm very excited about is share to earn. So being able to basically monetize your social media feed for any consumer coming into our park, being awarded tokens based on your social media performance, promoting my product, promoting brands in our park. But what you do with those tokens shouldn't just exist within my walled garden. Yeah. And so talking to organizations like airlines, for example, and saying, come, redeem Hypercoin for airline miles, redeem Hypercoin for other loyalty programs, and you kind of choose what you're playing for, which is pretty neat.
Deng, do you think it hurts the ecosystem when people use the term digital currency loosely?
I do think so, because if we take a look at all the digital currencies, not all of them are currencies. I would say 90% of them are not currencies. Let's divide the broader digital currency into three categories. Started with Bitcoin, stablecoin, and a few others. Those are intended to be no form of money. They could be called currency or coin. Well, tokens issued by protocols, they are more like a proof of investment. They are like the shares of a startup. So this should not be called currency. It should be called asset. And the third category is NFT. NFT is non-standard assets, if I may put that that way. If we keep calling these assets currency, it will be very misleading for people. Like I come from traditional finance background. We tend to judge the book by its cover or judge the protocol by its name. I got challenged many times by my ex-colleagues. Why you guys are issuing so many currencies? I say we're not issuing currencies.
Yeah.
We're building startups. It just happened that the proof of investment is digital. It's online. It's on chain. It has liquidity. Doesn't mean that it's a currency.
Daniel, do we need improvement on the regulation side? Is it moving fast enough, fair enough?
There's just a gentleman who said we've got 10 minutes, so it's a very challenging question. I'll say a few things about regulation. So first, I think fundamentally regulation evolves because of unethical behavior of actors. So I remember I was at a conference in 2018 in Taipei, and I said, if this ecosystem doesn't stop defrauding each other, we're going to get this regulatory blizzard. And then here we are. We got the regulatory blizzard, right? So one of the key things is just behave in an ethical way. I think maybe regulators will be more comfortable. That's one thing. The second thing is regulation can never be as quick as industry moves. And that's fine, because regulators are not in charge to drive innovation. They're in charge of protecting the financial system, making sure nobody loses their shirt.
Yeah.
So what is very important with regulation is that the right things get regulated. Yeah.
But what does this mean, Deng, for the institutions who want to enter the space when it comes to their mandates versus some ambiguity or slowness when it comes to regulation? Deng.
Like Daniel said, there should be rules, and there should be areas that be regulated. For institutions, I think we, blockchain or crypto or Web3 players, we want to involve more institutions. We have to let them feel comfortable to get in. It should be a level playing field. Instead of being defaulting each other, there should be rules. But I also agree with Daniel, is that the regulation should be clear. There should be a clear regulatory framework. And the regulatory framework should allow flexibility for innovation. So I think for institutions to get in, we need to bring proper regulatory oversights into the space.
Alexander, let's all congratulate Alexander on closing his Series A round of $63 million. It's going to be announced in a couple of days, so we're happy to announce it here. How easy was that, Alexander? I mean, you're still a pre-revenue company. How did you do it?
Well, we're very excited about everything that's happening in Saudi Arabia, and we have some very exciting plans here. And that's a big part of our future as an entertainment company. The first day of FII, I heard the word entertainment said on so many stages, and I was so enthused by that. I don't think there's ever been a moment in history where there's been such a large amount of effort, enthusiasm, and ultimately capital put towards the future of entertainment in a single country ever, as is happening in Saudi Arabia today. And we are just absolutely thrilled by that. And so we have very exciting plans to be part of that kind of entertainment revolution.
How difficult was it to raise the money?
It's always very challenging to sell an idea, but obviously we have an extraordinary team. We have great investors that backed us, and I just kind of like really keen believers. And so,
did you sense a big appetite among regional VCs?
We didn't really talk to any regional VCs. We don't have any regional VCs on our cap table. Our round was led by Galaxy Interactive, which is an extraordinary gaming fund. They were able to see the opportunity and really help us more than anything. And extraordinary group of kind of investors that have always pushed us through our seed round up through this A round. So very excited. but challenging, of course.
Mabruk. Deng, of course, it's all new and there are no success formulas for startups, and you're always out there picking ones, choosing to invest in ones. Tell me what you look for when you're looking at the next big companies of Web3 or.
Sure. As this is a very nascent industry,
Yeah.
I have to be honest, there is no formula in selecting a successful project. But we do have some frameworks. Like one is the solidity of the technology. Are they like really innovation from tech perspective? Two, like I said earlier, it's about their business model. If this is copying existing business model on chain, I don't think that's going to work. It has to be blockchain or crypto native. Thirdly, it's about how the project approach its audience or its users. It's more decentralized, more community driven, more built for the Web3 or blockchain native users. That's what we emphasize.
How much does it have to solve an actual problem?
It has to address a real need, a real problem. We don't have the many of the startup founders. They will easily, like what we say internally, inventing wheels behind doors, behind closed doors. That's not the right way to start a project. They have, like you said, I agree. You have to address real needs.
Alexander, in your case, what's the real need? Was it the users? Was it the malls? Was it the.
The business was founded off of kind of changing retail ecosystem. We found that opportunity pretty early in our journey. Shopping malls need a new format of a track loop, a new format of entertainment. And so our initial capital was actually raised from mall developers, non-dilutive CapEx investment. We're opening up 2 spaces in Dubai and 1 space in Riyadh. In the next 12 months, we'll have 240,000 square feet of entertainment attraction live in the next 11 months. It was really born out of a kind of changing retail ecosystem, and that ultimately evolved. And that really changed to a
real need by the malls for creating the experience.
Yeah, we were like, I think pre-COVID there was a real energy towards, I guess what you could call like the content creation, forward entertainment attraction, and that ultimately shifted into, content and gaming really being the driving forces behind our physical product.
Daniel, the global economy is stressed right now. Does that make you less optimistic about the future of Web3?
I think one thing that crypto ecosystem hasn't really seen is a macro environment with interest rates, right? So that might slow us down. It's a little bit naive to think that there will be no impact. But I don't think that this decentralization journey is going to happen overnight. So if you approach this with a sort of long-term objective, I think it's still relatively early. You look at daily active users on the most active decentralized applications today, they're in the tens of thousands.
True.
WhatsApp has 500 million, so I think there's way to go, and we'll get there eventually.
Deng, how optimistic are you? And do you think one of your companies is going to be the Apple of Web3?
I would say we have to separate the markets. We always use Web3, metaverse, blockchain interchangeably.
Yeah.
But matter of fact, the market is, at least there are 2 markets. One is the primary market.
Yeah.
That's the VC side. The other is secondary market.
Yes.
People's eyes are always on token prices.
True.
I would say there is more sentiment on the secondary market, which is closely correlated to traditional capital market. On the primary market side, we're seeing still there are hundreds of thousands of builders building applications on blockchain. Matter of fact, we are investing more projects recently than in the bull market because we see real value when builders were still building during the so-called bear market, those projects are, in a way, more solid than projects that are.
Usability at scale remains key here,
Yes.
Deng.
Sorry?
Usability at scale remains key here for the success in the future.
Yeah, definitely, definitely. Yeah.
So we come to the end of our session. I'm told. Would you like
I'll
to
come to you
end
afterwards.
quickly with any note to our guests? We've got 1 minute. Daniel.
I guess
you
the one key message for me is that Web3 is built on top of smart contract platforms, and therefore it's worth investigating the characteristics of these smart contract platforms, because you might not want to start to build on the wrong one, because you
Sure.
create a dependency there.
Understanding risk.
Yeah.
Deng.
I would say open mind, and open mind is very critical in getting to Web3 space. Internally, I'm the oldest on my team. When it comes to Web3, metaverse, and NFT, I tend to speak less and listen more to my younger colleagues, because we, in a crypto or blockchain space, we are more like immigrants. They are the natives.
The natives.
We should listen to them more.
Alexander.
Watch the space in Saudi Arabia. I think there's been so many interesting conversations had here this week in this space in particular. And yeah, I'm very excited to see the developments over the next 12 months, and we'll be back at FII soon to see what happens here locally.
Alexander Heller, founder and CEO of Hyperspace. Deng Chao is the managing director of Hashkey Group, and Daniel Liebau, the chief investment officer of Modular Blockchain Fund. And I'm Zeina Soufan. Thank you very much for attending this.
Thank you.
Thank you.